following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Of course, the FOMC just came out and dropped the Baby Ruth in the punch bowl. We were up rather significantly. We're down about 5 points. Now on the S&P, cash volume continues to be wistful, vaporous, light, but they're going to take one more stab at pushing this market down. It seems that there was a statement about global risks coming down, and the market took that as an option that they may talk about raising rates in June. If they talk about them in June, look for the rate hike probably not to come to before August. I think if they are going to do it, they will transmit it. But we'll have a long time to find out about it. I'm not really thinking that this market goes a great deal one way or the other. I think we've tried to push it down to the lows a few times, never really had the energy. We'll see whether we get any of that energy today. My work in options, as many people know, kind of depends on the wisdom of crowds. Right now, the option market makers are pretty much expecting the S&P to expire somewhere this Friday, somewhere around 2060 to 2080. And unless something drastically changes before the close today, I see nothing that changes that. We are locked in a very, very narrow trading range, and all the huffing and puffing does not seem to do a great deal to change that. Dollar index at 94.60, and of course we'll West Texas is flat. Dow's off 37. See if we got anything else going on here. I don't think there's that much. There's certainly not that much juice, but we will have to wait until the end of the day. I am long, not the indexes. I am long certain stocks. I don't think that there's a lot of money to be made in the indexes. On the opposite side of that, I think that there's a lot of money to be made in individual stocks where the people have been shorting them and shorting them and shorting them over the last few days. And I think they're back to shorting them right now. And that has not proved a way to break them lower. And we shall see. I think I've got a few tigers by the tail, but we shall see. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Quick on the uptake today, aren't they? But we digress. We'll wait for the market to digest a bit of this, but I don't think that there's a lot out here to say that we had anything other than maybe a little temper tantrum. And we'll go back to exactly where we were before this all started. And there's a few other things that will lead up to that. But the S&P, narrow trading range. The NASDAQ has a much greater range, at least through Friday. We'll show some charts on that and get into a great deal more in the show. In the 4 o'clock hour, Tom O'Brien is away, and I will be hosting in the 4 o'clock hour with Andy Heck. I've got a lot of questions to ask him. I haven't had him a chance to ask. So we'll be talking with him at 4:20, I think, for a segment or two, and bringing in some very important earnings, especially in technology. So we'll be doing that too. In the meantime, it's we got to get this party started.
Then it's all just a little bit of history repeating.
It is nothing but history repeating. And of course, in the stock markets, what's happened before will happen again, because speculation is as old as the hills, and human nature has not changed. But as we start on this day in 1989, a crowd of protesters estimated to number more than 1 million marches through the streets of Beijing calling for a more democratic political system. Just a few weeks later, the Chinese government moved in to crush the protests, killing thousands. And, of course, June 3rd, having the Tiananmen Square incident. And the most famous picture from that, of course, the gentleman standing up in front of a tank, daring the tank to run him down. And he's been on, I think, China's most wanted list for a very long time. I think he had to leave the country, if I remember right. But on this day in 1989, but man, this seems like yesterday, doesn't it? After the bell tonight, as we said, there are a lot more important things for the NASDAQ in the morning, a lot more important things for the S&P. And what does that mean to us? After the bell, Cisco Systems, not expecting a great deal out after them. In fact, O'Leary from the Shark Tank was ripping Cisco, and Cisco having its own particular issues, especially trying to sell in foreign countries. But I do digress. Salesforce after the bell. We will see how the bully of Silicon Valley, which is now what many governors and elected officials are calling the CEO of Salesforce. I'm thinking this guy has not watched his Game of Thrones enough, because he stuck his thumb in the eyes of many politicians who are probably more than willing to stick a knife in his back one day. We'll wonder when the cows come home to roost on that one. Right now, I don't see anything in their way, but I do see that a CEO is lining himself up. No use in making and picking on and making more enemies than necessary. But this guy is, like I said, a lot of people calling him the bully of Silicon Valley these days. Urban Outfitters, the one retailer out here in the malls, which a lot of people are watching very closely. And, of course, Williams-Sonoma, also more of a strip mall kind of place. I don't see him in malls, at least anecdotally, maybe they are. But down here, they tend to be in a lot more strip malls. We'll see how Williams-Sonoma does after the bell tonight in that 4 o'clock hour. We'll call them as we see them. Other things going on, Tim Cook has gone east. And, of course, already gone through China, throwing his billions. And there's some discussion that he's throwing more cash around in India today. And he's met with a couple of movers and shakers. He's going to be there for a few more days, trying to get India to open up. India has been like China, pretty much closed its business to the evil American. What have they done? Of course, a new iPhone would take generally a year or two of the average Indian to afford. So what did they do? All those trade-ins, they tried to sell those in India, and India has blocked that. We'll talk more about rather closed markets in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're kind of playing around the lows again, off 4.5 points on the S&P cash. 2.37 billion shares. Volume did kind of pick up right after the announcement, but it's still rather vaporous. It's not anything that makes me think that there's anything big happening. But who knows? Maybe we rally yet again before the end of the day. I just don't see enough juice either to the low side or to the upside to blow this market off. As we said Monday, I'll go back into that in a minute. But I do digress. Of course, Tim Cook has changed policy several times, but I think a lot of people are just very confused about what are open markets in the Far East, and whether it's China or India, they become more and more protectionist, not less, as time has gone along. And what else can you say about it other than that? We have seen a market over there that is not ripe for apples picking. See what I did there? Yeah, pretty clever, huh? But he continues to be over there. We'll be over there a few more days. Been seen rubbing shoulders with some folks. And, of course, the instant thing that they're doing there is talking about the possible buyout or buy-in of many countries. I suspected that the Apple buy-in of a company over there for $1 billion was nothing more than a thinly veiled payoff, because, of course, the startup CEO is close relations with most of the Chi-Com leaders, and you just never know how these things are going to work out. But seems to me like it's I'd call this the Tim Cook payoff tour to actually get back into some of these markets. I just don't see that it ever works. I think it's kind of like The Wire. If you ever watch that, it's like the 4th or 5th season. The actor from, I'm trying to remember, Luther, the BBC series, gives this guy a bunch of cash, and he just runs off with it. As far as I can tell, that's all that's happening here right now. It is a mad, 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 mad market. We're going to get into stocks that are moving already. But like I said, I don't see a lot happening here before the end of the day that changes anything. In fact, why don't we just go to some of the charts that I'm looking at right now. The first are expiration charts. We've talked about these before. We have new listeners. I'm one that believes in the wisdom of crowds. If you get about 25 people in a bar, ask them to guess how many marbles are in a jar. You will get somebody that is real high and one that's real low. And if you average them out normally, 24, 25 people, you will get within about 5% of the actual number. And you can do that for many things. Things like the FOMC meeting, where one person makes one decision, I have a real hard time on. But by extrapolating that and looking at all the bets put on by people in the option market, we can get a kind of an idea where options are most likely to expire, and that is 85% of all options go unexpired on Friday at the close on average. That does not meet every time, but we can see where the most probable and likely spot is for things like the SPY to expire. And when I see a chart like this, I saw it last Friday night, I exited my short positions and started looking for long ones. Both of them are showing healthy gains so far. Neither one of them are index positions. But I looked for stocks that were really washed out, had tons of people continuing to short them after they'd moved down, and had very good chart patterns. So anyway, when we look at what is going on, of course, in the S&P, you got a pretty good likelihood that, maybe 20 points higher, maybe 40 points higher. Too many people shorting out here in thin and lower volume markets for me. Could we break? The answer is yes. But I would rather have pretty much the very inexpensive calls that we purchased, or even some of the less expensive stocks we purchased, than trying to bet on a very down market. Now, this is the SPYs and, of course, the SPYs. But if we go look at something like the Qs, very different story out here, and that is this thing shows a very wide range of possible outcomes. And, we closed at, 105 last night. But when we look at this, there is a pretty big indication that we're not going any lower than 102 on the QQQs. But this is really pretty flat, maybe $150 million, which is nothing in this market, all the way up to past 110 on them. So there are a super range of possibilities out here in the Qs that do not show up in the S&Ps. So needless to say, I am long in those tech stocks that might see dramatic changes before Friday to the upside. On the downside, I may have some very small change to lose if everything does not go my way. But so far, doing fairly well. And we'll talk more about this maybe on Friday. But like I said, we could see a lot of movement in the S&Ps, or very little movement in the S&Ps, maybe 20, 40 points higher is what we're looking at, but a wide range in the Qs. And I suspect that the Salesforce numbers tonight will be fairly good and move the Qs, along with a ton of people that are short them, probably a bit higher. And let's just start going into some of the stocks that have been moving. Let's go ahead and load those. ACXM, it dropped the chalupa, gets the losing horn. And this is, why is that doing that? This is off 11% today. I don't know if you can say a great deal other than what the chart says out here, which is you're headed back down to this big gap up. That gap up had 1.7 million shares. We already have 1.8 million shares, so this thing's going to come down, fill this gap that goes to the 4th of February. That close was 1820. You're 1911 for the low today. Don't see anything that changes that. Apache up about 2%. Watching this one fairly closely, of course, because of the previous highs. The November 10th high at 56.31. Then we get to $58.06 on April 27th with 4.8 million shares. We're back up with 10 million shares once again with Apache and knocking at the door. But guess what? Nobody home. They've kind of turned around back into this trading range again. We will look closer at what happens when we come back from this short commercial timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're at 2037 on the S&P Cash, so we've broken some of those lows. Volume still is not really picking up. 2.51 billion shares on the New York Consolidated Tape. Maybe if we break a few more points lower, we may start seeing some lower prices come in. My guess is that we close right back above 2042 and are in the and stay in the trading range, but I'm biased. I do have some long positions that would do well if we stay here. Other things of interest, as we said, we'll go through some of these stocks that are moving out here today. Dynagas had a nice gap up, has sold off. It kind of looked at this one, nice, decent gap up to $15, but is pulled down. LNG still problematic, to say the worst. What else? Hormel Foods, and of course, makers of the delectable treat.
You mean spam?
Yes, I mean spam. That's what they make. Hormel dropped the chalupa out here today, gapped back up on the November 24th. Came down with pretty high volume today, 9.4 million shares already. Probably going to find some support level here. I'll ask Andy about this business in the 4 o'clock hour, but I think the chart says it all here. But interesting to see at least one food company not doing so hot. Maybe it's the cost of their goods. Don't know any much about this company, ICL, Israeli Chemicals Limited. It gapped down this morning. And of course, what most people were waiting for was Lowe's, after Home Depot failed to throw any Roman candles up over its business. Lowe's did come out with a little bit better than expected. November 25th high, $78.13 with 5.5 million shares. We blew through that with the 10 million shares already, but back in the trading range on this one. Now off 11 points in the S&P cash. So we'll continue keeping an eye on this. Energy was about the same up as on the way down with Lowe's, the last part of the retail chain that's showing any big difference. SAAS, which is in contact, a huge move out here. Huge. I haven't had time to actually read this stuff, so we'll get to it as I keep an eye out for the rest of it. Cloud Contact, the Cloud Contact Software Center announced that it entered into a definitive agreement to be acquired by NICE Systems for $14 a share. In fact, I was talking to Andy Heck about a company last week that said that they were being bought out, or said that many companies were buying them out. You know how you tell a company's really getting bought out? That they're going to give them $14 and it goes to $13.92. That's how you know a company's truly getting bought out, and not just a giant load of exhaust waste from a male bull. Like I said, bull has to be male. A male cow, a male bovine. We'll think about that. STM. Also, STM Microelectronics, a nice little gap up here this morning, but of course, not the kind of volume that you would want to see for that kind of stuff. It is and continues to be rather problematic to get a lot going in the in that sector. Of course, the big loser today is a Target, down on 31 million shares, right back to its January 20th and February 12th lows. We continue to see these lows with pretty big volume out here being broken, and I think that tells you everything. Again, when we get into earnings in the morning with most of those other retailers, the question is, how will they come in? Tesla, this one tried to gap up in the morning, came back down. I don't know if there's a lot to be said for this one. The company that I think we talked about maybe 6 months or a year ago. In fact, I think it was last summer. We talked about this company and many people calling it a total fraud. It's one of these, it's called VIP Shops in China. This is the company that said they had 100 locations, and when they went out, found out that there were actually 4 locations. Nothing ever happened to them because, of course, they're a Chinese company, and you can't really do anything to a Chinese company. You can't put the people in jail. You can't do anything. I played a bunch of clips at the time from many short sellers going after the people that were pushing this. And some of the questions, maybe I'll find them during the break because I've kept them, and play them back again. But again, I can't warn people enough about companies where you cannot find out anything about the books in a company. And China is a giant black hole. Whatever they say goes. And a fool and his money are soon parted. They say, I can't, in any kind of idea, come up with a reason why you would want to be involved in companies like this that have proven to lie about what they have, and file one set of books for China and yet another set of books for the SEC here in the United States. I will find that clip before the end of it. What else do we have here? Well, Walmart getting a little bit of bank action on this. 2039 on the S&P cash. Now we're off 7 points. Volume still is not anything that would make me think that there's any freight train coming down the road. 2.6 billion shares on the New York Consolidated Tape. Anyway, as a bank shot with a Target dropping the Baby Ruth in the swimming pool, down on heavy volume, but maybe not heavy enough. Walmart actually coming down into the February 18th low that had 27 million shares to 16 million so far today. I actually went to Walmart at lunch, picked up a few things. Business seems to be okay. I'm not saying that you want to go long the stock. I just have a feeling that maybe a lot of the bad news is already in, and I may think that you might get at least a dead cat bounce out of some of these retailers like Target and Walmart. But I do digress. Now, one of the things before we get into VIP shops when we come back, and a well-deserved, I informed you thusly, is if you like the Power Trading Hour, would you tell a friend? Actually, would you tell 2 friends?
And he tells 2 friends,
And she tells 2 friends,
and so on, and so on, and so on.
Yes, it would be on so on. Pretty soon we'll have billions of listeners to the Power Trading Hour, but I need you to start. It all starts with one tiny step. Tell your friends, tell your enemies, tell people who think their retirement plan is the lottery to listen to the Power Trading Hour. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And some of you may have remembered this from, I think it was last summer. I guess I could look at the file dates and figure this out, but there were about 8 different clips that I took out of this conversation. You may occasionally see the anointed one, someone who knows all, or at least is purported to do that. I forget his real name. I call him Herman Munster because his last name is Munster. But he's kind of a tech guy, and he gives a lot of very big, glowing recommendations about stocks. But if there was one reason to not listen to him was his constant belief in pushing VIP shops. But they cornered him one day last summer, and this is when, say, every once in a while, random acts of journalism come out and they actually ask decent questions of somebody, and they actually do something that is pretty much unheard of on the street. That is, they tell the truth. Anyway, the question is about VIP shops and whether or not Herman Munster of 1313 Mockingbird Lane, all you people that get that, email me at path@tfnn.com. Do you look at the books at any of these Chinese companies, Mr. Munster?
For years, we did do that, and we found out that companies can make up whatever they want to. So even if we connected the points and everything
In China or in the United States, Gene?
In China.
Okay.
In China, and as they connected perfectly, we still had problems of finding that some of these companies were fraud. I could spend a lot of time talking about frauds in China. And at the end of the day is that forensic work and really doing the hard work in China, I hate to say it, but it's next to impossible unless you're on the inside.
And we're not on the inside. We're on the outside. And why I love Chinese.
I like Chinese. I like Chinese.
It's a one-way street and not a great place to invest in. So we will continue taking a look at that as we do the market. We've dipped one more time. We dipped our toe one more time lower. Out here, got to a low of 2034 on the S&P cash. We're at 2042 right now. Volume, like I said, it continues to be tepid every time we go down there and stick our toe in the water. 2.67 billion shares. We're going to have to get some volume. Maybe it happens in the last 30 minutes of the day. But right now, not seeing any kind of real people screaming, and watching the options go by on my screen here. Don't see a lot of panic and people throwing paper in the air. Don't see any 2 old gentlemen yelling, "Get back in there and sell," or "Get back in there and buy," nor Mr. Beeks wandering around anywhere. 2041 on the S&P cash, but a lot of action to go before the end of the day. So let's get into some of the stocks that I've been looking at. that had tests and see how these things have done. Wanted to see how some of these stocks at highs had and testing highs had done. Yamana Gold gave a fairly decent signal yesterday. It went through its previous high and a existing gap. Last time at that high, 23 million shares. You went above it. You closed back below it. It is everything that you ask in what is called proving the point. In fact, let's go back a little bit farther with Yamana and see where this gap actually occurred. This gap came down 11.5 million shares on the 29th of October 2014 is when this thing blew apart. Finally got down to $1.38 on January 19th and came back from the dead. We'll call this a Lazarus stock. But, man, just about everything that you could get out of this one, I think you've gotten. Maybe a chance to go out and get a faster horse. But certainly you got at least a good sign out here that you got everything there is to get. And maybe any more is just being greedy. Other stocks of interest. Bluebird Bio, I've been watching this one for a while. Nothing in here that says that biotechs have truly bottomed yet, but man, they're starting to look very interesting to me. But again, fairly light volume in Bluebird Bio. We've got 3 days now of this thing going sideways, even on a day like this, where we threaten to sell off once again. And so far, lighter volume out here on some of these. This is expiration week. Of course, 80% of them will see a higher close than last Wednesday's, not this Wednesday's, but last Wednesday's high of the day. So you've got a lot to figure out here on whether or not you've got to have a compelling evidence for me to be short into expiration week. Sometimes we have it. I just do not see it at the moment and continue to think, as I said at Monday, I think I said at the beginning of the show, that I'm picking individual stocks. And I think that there's a lot of room to run if people continue piling on these stocks with monster short positions. We could have a nice short squeeze. And every once in a while, you get the opportunity to make a huge ton of cash. And I think maybe today, tomorrow, Wednesday, today, Thursday and Friday, some of these stocks that everybody's been sitting on and throwing everything against the wall to see what it's going to stick, I think they're going to have to go to this weekend and then into next week with decreasingly lighter volume and try to push this market down. I think it's going to be incredibly difficult. If you're betting on the downside in this market, I suspect it will be after the 3-day weekend coming up. Other ones, Boot, B-O-O-T, Boot Barnes Holdings. We've talked about this one for a few days as it's come back in. Doesn't look all that bad. I would have liked to seen the energy dry up even a little bit more. But, 460,000 shares today. Not bad. It's gone back into its sign of strength, which happened on February 3rd. For these retailers that are not doing all this well, this one not looking all that bad, at least back down at these levels. I don't know a lot about the Boot Barn, but I wear tennis shoes. But it doesn't look as bad. Let me put it this way. A lot of stocks look a lot worse than that. Cabot. Oh, Cabot. Nothing in this one. We'll move on. A lot of people have asked me about DDD, and the chart does not look all that bad, but I suspect there may be a little bit more weakness. If this stock was going to run, it probably would have happened this week. What happened this week? I'm going to tease you a little bit, and we're going to talk about something that did happen this week that we should have seen volume, and we should have seen a move in 3D Systems and SSYS. We'll look at both of those when we come back. But there was an event. And normally on these events, when new things come out, something should have happened. It did not. It was the dog that did not bark. If you're into Sherlock Holmes, we'll talk about that and many more things in the last segment.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
2045 on the S&P cash. And actually, we had a question in the email. You can always email me at path@tfnn.com. And the question was, I made a statement that 80% of the time that the markets close higher than the Wednesday before expiration week. And what number would that be? And that would be 2064. So if you are looking for what number that 80% of the time this thing will close over, it is that. Not that much higher. Certainly not going to be a big deal, but I don't see and continue to don't see the kind of volume that makes me think we can break this out. It's going to take a major event, a black swan. It's going to have, there's going to have to be something that happens to really move this market along. As we've said from Monday, option market makers have dug in about as far as a Alabama tick on a hunting dog, and they have no desire to get off of this. I've been watching the last 3 days of options. They have not I want to say blinked an eye. That's right. That's correct tense. They have not blinked. Not at all. They continue to suspect that they're going to get 2064 or higher come Friday. And, of course, anything close to that, not going to make a big deal to them. If the puts have a little bit more, then the calls will eat it. If the calls have a little bit more, the puts will eat it. It all kinds of comes out at the wash. But somewhere around that number, they would make the most amount of cash. And, maybe we get it. Maybe it breaks before the end of the day. But like I said, we're going to have a great deal more volume to get this down. And like many people in the den say, maybe Janet is got her fat finger on a mouse buying away. You never know. But my thought is that they're just going to hold this up until the lighter volume of summer. Anyway, we're talking about 3D systems. There was a big convention in Orlando this week where the new products for 3D systems and SSYS, they roll out their products. If there was going to be something big out here, it was going to be important. HP did release their first big foray into 3D printing, and this is industrial printing. The machines somewhere starts at 120 grand, so this is not cheap 3D printing, but it is very interesting printing. They have bins where you can inject, I think, 4 to 8 different chemicals to make your products out of. So they're working with things like multi-level epoxy, additional kinds of threaded and reinforced plastics, different colors, all at the same time without reloading the machine. And these things are anywhere from 10 to 20 times faster. But not a big hitch in 3D systems or SSYS either one. So maybe they were pretty much ready for this. But at the same time, would have liked to seen a sign of strength with maybe some new products or a new strategy that they released at that conference in Orlando this week. Not a whole lot. And, of course, HPQ, no big deal there either. So kind of a dead market for that, at least at the moment. But I don't mind dead markets. I would love for this thing to go 30 days sideways and have everybody lose the attention of all the fast money crowd. Maybe I can sneak in and buy these at distressed prices. We'll see you at the 4 o'clock hour. In the meantime, sell when you can, not when you have to. And we'll see you at the 4 o'clock hour of the Tom O'Brien Show.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.